What is going on, you guys, and welcome back to another video on the channel. My name is Brandon. If you're new here, be sure to subscribe because we post weekly videos on the stock market and you can learn more about our investing academy. If you are a beginner, that'll be that first link down below. But when it comes to investing in the stock market, I always like to say that one of the best things you can do is to simply go out and just get started. Just get your feet wet, get your money in the market, get compound interest working for you, just get an overall feel of what it's like to be an investor and start building up experience. That said, it's also very important to do your research beforehand so that you can prepare yourself for what this investing journey is all about, really so that you can avoid any major mistakes and just make this as smooth of a path as possible. And hopefully through this video, I'll be able to make things a little bit smoother by highlighting some of the most important things that you need to know when it comes to investing in Canada. And we'll start with point number one here. We got a bunch of points to cut off, and this may be for some super obvious, but for our beginners out there, maybe not. The first thing you need to know when it comes to investing in the stock market is whether you are in a position, whether you are ready to invest. Depending on what province you're from and what type of account you're trying to open, there are age restrictions. So you're definitely gonna wanna make sure with a quick Google search that you are eligible to even open up an account. You'll need to have things like your SIN number ready, your social insurance number. That is something that you will need to open up an account here in Canada. But aside from those technicalities, what's even more important to ask yourself is to ask if you're even ready from a financial standpoint. Is your financial situation good enough that you can go out and deploy money into the stock market? Because as much as people don't want to hear it, if you find yourself in a lot of debt, a lot of consumer debt, for example, you have high credit card balances, if you've got some loans that need to be paid, maybe you haven't yet established an emergency fund, which is a little stash of money that you do keep on the side in the case of an emergency. If you haven't got these things down, you're probably better off focusing on paying the debt down, getting that emergency fund built up before you dive into the stock market, as tempting as it is. But first things first, you do want to make sure that you are in a sound position. You are somebody that is ready to tackle the world of the stock market. Now, the next thing that's super important is doing a little bit of research beforehand and establishing a strategy that you plan to execute when it comes to investing in the stock market. And I always like to say that there are a million different ways to invest. And it's not to say that one's better than the other, one's right, one's wrong. It's about finding what strategy works best for you. Because you, the viewer, I have no idea how old you are, your investment strategy will be very different than your neighbor, than your grandparents, than your children. Depending on your goals and your specific objectives with your investments, you may lean more towards a growth strategy. You may lean towards a dividend strategy. If you're concerned with drawing income, you could take a value investing approach like the great Warren Buffett. You can take a passive approach, an active approach. There are so many different ways, but without having a strategy in mind, at least having something to aim for, you really are gonna find yourself lost when it comes to investing. And I always like to say, establishing your strategy is kind of like laying that foundation when you're building a house. You lay the foundation first, and the actual investments, the actual stocks and funds that you end up buying down the road, those will all fall in place. But without that strategy, without that target to aim for, without the foundation, you're gonna be pretty much screwed. Now, point number three, regardless of what strategy you ultimately land on, you almost definitely want to take advantage of a tax sheltered account. And one of the first things you'll have to do when it comes to investing after you've chosen your platform is actually going out and opening an account. And here in Canada, we have some amazing accounts that will shelter your gains. It will shelter your investments from tax. You've likely heard of things like the TFSA, the tax-free savings account. We have the RRSP, the Registered Retirement Savings Plan. You even have accounts like an RESP, which is an education savings plan. If you are looking to save some money for your children's education, we definitely want to utilize these to the best of our ability. We want to try and max these out where we can have our investments growing, sheltered from tax, really just giving us more money to compound before we lean over into our taxable accounts like a cash account and a margin account. It's a no-brainer. This is something that each and every one of us should be doing. Now, this next one may come at a bit of a surprise, as I know this is a video for Canadians, but don't limit yourself to only Canadian investments. And this is something that a lot of Canadians find themselves doing. There's actually a term when it comes to the investment space called home bias. It's the bias to want to invest in our own companies, our own local stocks, and really just rely on the Canadian market. But one thing that we do need to keep in mind when it comes to investing is that Canada makes up such a small part of the global economy. In fact, I think the market represents something like 2 to 4% of the entire global economy out there. So when you factor that in, it can kind of be silly to limit yourself to just that small fraction of the huge scope of investment options out there. And you look to some of the most successful, some of the best investment options that we know in our world today, a lot of those do come abroad. Take the US, you can even find good investments over internationally. Take Asia, take Europe. My point to you here is that when it comes to actually selecting your investments, don't limit yourself and do look abroad, because that's really one of the best ways that we can go out and build a well-diversified portfolio. Now, the next thing that you need to know, if you are somebody that is gonna go out and actually pick, for example, a US stock or an international stock, make sure that you're purchasing the right version. And a good example of this is if we look at a company like TD Bank, Toronto Dominion Bank, which we all know very well, this stock does trade on the New York Stock Exchange. So there's an American version and a Canadian version. One trades in US dollars and one trades in Canadian dollars on the Toronto Stock Exchange. So when it comes to actually logging into your account, let's assume you use Questrade, which is my favorite platform here in Canada. Maybe you're using something like Wealthsimple. Just be sure that you're selecting the right investment option. You can often find the right one by typing in .to after the main part of the ticker, which will signify that you are looking to buy the Canadian one that's traded on the Canadian exchange. Now, this next point is something that is super, super important. Again, regardless of what strategy you decide to take, whether it's a growth route, whether it's a dividend route, or an active or a passive approach, if you're not comfortable with going out and picking individual stocks because you're not sure which companies to pick out of the thousands and thousands of options out there, index funds or ETFs can be an awesome option to look into. And I always like to say that an index fund is essentially a basket. It's one basket or one fund that is comprised of thousands of different stocks, thousands of different investments. And by going out and buying one fund or one basket, you're essentially getting access, you're diversifying, you're spreading your risk amongst literally thousands of different companies. And for somebody that, again, isn't comfortable with going out and selecting an individual stock, an index fund is an amazing route to look for. It's an amazing strategy in and of itself. Again, just to scale back that risk, to really spread your eggs amongst different baskets, and as well give you exposure to a ton of different areas in the market. Just for a fun tip, for example, this ETF is the ETF XIC. It's actually one of the ones that we work on very hands-on with our students in our investing academy. This ETF gives you great exposure to the broader Canadian market. If you take a look at what this fund is comprised of, this fund contains 233 stocks, including names like Royal Bank, TD Bank, Enbridge, Bank of Nova Scotia, Canadian National Railway. These are just the top 10, but this is just an example of how you can go out and spread your risk by buying one fund, one index fund, one ETF, and inherently be investing in 233 great Canadian companies. Now, a point to build directly off of that is to always research and always do your due diligence and always understand exactly the type of investment product that you're investing in. And to use XIC as an example to continue on, all of this is available online if you do want to look it up, but you can actually take a look at the sector breakdown and how this fund is exposed to the different industries in the market. Being a Canadian fund, we have a very high weighting to the financial sector. We can think of the big 5 banks as a major part of our economy. Energy is obviously a major part of Canada with our oil sands, industrials and materials, so things like gold, copper, and silver. Going out and taking the time to understand how a fund is invested, how it's broken down, what it's set out to achieve, or even with an individual stock, at least knowing what the company does, how they operate, how they make profits, what their plans are for the future. As Warren Buffett likes to say, when it comes to investing, risk comes from not knowing what you're doing. And by understanding your investments, that will give you the competence to know why each aspect, each one of your holdings, why it does what it does, and why it makes a part of your overall portfolio. Now, moving on to the final points to wrap up this video, and we did save a couple very important ones for the end, and this one here is a little bit more intermediate, a little more advanced, so don't feel bad if you don't understand this. But if you decide to hold a US dividend stock in your TFSA, so a US company that pays a US dividend, those dividends are subject to a 15% withholding tax. And this is something that does fly under the radar for many people. If you have no idea what I'm talking about, I'll try my best to explain it. We actually have done some videos explaining it, really broken down and in depth. But certain stocks that you own, those stocks may opt to pay you a dividend. And what that is really, it's just a little cash payment. It's a little stream of income that you get into your portfolio simply for holding the stock. It's usually a number of cents, sometimes as much as a couple dollars for every share that you own. Now, if you hold a US stock within your TFSA, the IRS does actually withhold 15% of that dividend. You're gonna be receiving 15% less than if you held that US stock in a RRSP. So again, a little more advanced, but it is something that we do get a lot of questions on, and especially when you start getting up to the higher portfolio sizes, when you are nearing retirement and you're starting to deal with some more significant chunks of money, that 15% can add up. So it is something to keep in mind that a US stock, from a tax perspective, is technically more favorable to hold in the RRSP, but I'll let you take that with a grain of salt. Finally, the last point, which in my opinion is the most important one for any investor out there, is that learning never, ever stops. And I myself have personally been investing in the stock market for going on 10 years now. 10 years of experience. I went out and got my licensing here in Canada. I've been working for 4 years now at our family firm, where we're actually dealing with client portfolios. I've had a lot of experience with actual stocks being invested in the stock market, and every single day I'm learning something new. It never ever stops, and mistakes are normal. They're part of the process. Making mistakes, learning, and growing from them, because as I touched on, there are a million different strategies. There's a million different ways to approach the stock market. It's not to say that one's better than the other, but it's all about just absorbing the different information, taking bits and pieces, and ultimately finding out what's the best strategy, what's the best method for you personally to go out and invest in the stock market, what works well with your lifestyle, what works well with your situation. And each and every day, as long as you're going out and watching videos like this, reading books, furthering your education, it's just a process that you'll continuously build upon. Your learning will compound. It'll be like compound interest, like your portfolio. Your learning will just compound and compound, and before you know it, you'll be super comfortable with the stock market, and you'll be happy to look at your investment portfolio just growing and ultimately providing for your future. Those are just some of my summarized points as to what I believe are important things that every Canadian investor needs to know. Question for you guys, the viewers at home: whether you're a beginner, whether you've been investing for a while, or even if you're a seasoned investor, what is one thing that you think all Canadians should know when it comes to investing in the stock market? Leave a comment down below. That way I can check it out. And as well, other viewers, beginners to the channel, they can learn from your experiences, from your past mistakes, and ultimately just try to help each other, help this community, help Canada become better at investing in the stock market. Leave a comment down below. I'm very excited to hear the opinions and views from you guys at home. If you enjoyed today's video, and if you found it helpful, and if you learned something new, feel free to drop a quick thumbs up. That is a great way of supporting the channel. Like I said, we post videos here every week on the stock market, so subscribe if you're looking to learn more. And if you are just starting out and you're looking for some step-by-step guidance, you want to get your hand held in setting up your portfolio, we're helping Canadians every day go through that entire process, click by click, where they can follow along, getting their account set up, going and funding their accounts and selecting their investments. You can learn more about that with our Investing Academy. Like I said, that's that first link down in the description below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.